morning. In the previous session, we have discussed about material cost, how it will be rolled up to the next level in multi-level price determination. Now we will discuss about activity cost, how it will be rolled up to the next level, how the calculation will be done. So here, how many activity hours we are using here? Assume for 1 hour 500 rupees actuals. When comes to plan, when comes to actual 600. So revaluation is 100 rupees it will take. Now when comes to this revaluation of activity, when we are using activities not at the time of raw materials, at the time of finished product we are using this revaluation of activities, semi-finished product. So to manufacture this semi-finished product, so how many labor hours we require? 11. Sorry, one is for unit. When comes to actuals, 12 units, 12 hours we are using them. 12 hours we are using. So when comes to activities, in case of this activity revaluation, SFGX, activity revaluation, SFGX. Okay, activity revaluation, SFGX. Actual hours we are using is 12 hours. 12 hours. So plan rate is 500 rupees per hour. Actual is 600 rupees per hour. The difference is 100 rupees. Difference 100 means 1200 rupees will be the price variance at this semi-finished goods level. Revaluation of activities determined and rolled up to the next level is 1200. Okay. The 1200 total price difference is there because in SFGX, when it comes to actuals, we are consuming here 12 hours, 12 labor hours we are consuming. 12 into 100 rupees, 1200. So out of 12 labor hours, okay, this semi-finished product we are consuming 5 kgs and we are keeping stock as only 3 kgs. Semi-finished product we are consuming 5 kgs. This is rolled up to the next level. 5 kgs is rolled up to the next level and 3 kgs remains as a, it will be added to the stock value. This 3 kgs is a closing inventory. It will be added to the stock value. Okay. So this 1200 will be distributed between 5 kgs and 3 kgs. 5 kgs and 3 kgs. So here 5 kgs means 1200 into 5 divided by 8, 750. 1200 into 3 divided by 8, 450. This 750 will be rolled up to the price variance rolled up to next level, and this one is price variance added to stock. This price variance is added to stock because we are having 5 kgs and 3 kgs, 5 kgs and 3 kgs. 5 kgs only we have used in finished goods manufacturing and 3 kgs are still there as a stock. The revaluation of the activities at semi-finished goods level. At the raw material level, there is no activities. We are purchasing raw materials from the external. Next one, finished goods. Revaluation of activity at finished goods level. Here, we are manufacturing 2 kgs. Out of 2 kgs, one already sold. Another one is we are keeping as a stock. Right? So in manufacturing 2 kgs, so what is the cost rolled up from the 750? The 750 should be added to the finished product. For this 2 kgs, 750 is the cost rolled up from SWGX. 750. 750 is for 2 kgs. So for 1 kg, it is this one divided by 2, 375, and 750 divided by 2, 375. This is rolled up to the next level, that is whatever the stock we have sold, this was this, it will be added to the inventory valuation, closing stock. This is 750 is coming from the SFG. Now in this finished product manufacture process, how many activity hours we are using? If you go back, 10 labor hours we are using. Actual, we are using 10 hours. So the difference is 100. Earlier only with plan rate only it is valued. The difference is 100. So 10 into 100 here. Revaluation at this level. Revaluation. 10 hours we are using. 10 into 100. 1000 rupees. So this 1000 rupees will be distributed between finished product sold and kept in stock. So here same thing, 1 kg and 1 kg. 1 kg and 1 kg. Right? So this is how the values will be distributed, 500 and 500. So this is including activity cost. What is the final price now? So final price is what we are going to calculate, PUP, periodic price unit. So for this PUP, the actual PUP formula is cumulative preliminary valuation, that is nothing but standard price, plan price, plus cumulative price difference of same level, cumulative price difference of same level, plus cumulative price difference of lower level, cumulative price difference of lower level, plus cumulative exchange rate, if there is any exchange rate difference, both at same level and lower level, same level and lower level. Same level and lower level divided by cumulative inventory. Cumulative inventory. This is formula for PUP. Now we will calculate this PUP for one by one in this multi-level price variance. First is RMX PUP. So what is the preliminary valuation here for RMX? In this RMX, there is no activity cost. Right? At this level, the original valuation of this RMX is original valuation of RMX. Here, 1000 rupees is the plan price. Later 200 difference is there. Cumulative preliminary valuation is 1000 rupees. Later 200 value as price difference is 200. So 1000 plus 200. Material price valuation is 1000 plus 200 divided by how many kgs it is there? Quantity is 10 kgs. Plan and is 10 kgs. Out of 10, 9 we have consumed, 1 is in stock. 10 kgs. 1000 plus 200 divided by 10 kgs. The total is 120 rupees is the PUP price. So this is used for valuation of inventory for the previous period. Previous period means this PUP price we are calculating as a period in process. So whatever the period is closing, for that this is the actual price of the raw materials. Right? Next one, semi-finished goods X. Semi-finished goods X at multi-level price variance. How the system will calculate it? First the preliminary valuation. Go to preliminary valuation first. Preliminary valuation is for SFG is 4,800 plan rate. Preliminary valuation is nothing but plan rate. 8 kgs into 600 rupees, 4,800. After that, the difference of the price difference is 2,100. This is 4,800 plus 2,100. Cumulative price differences. First one is price variance. Preliminary valuation 4,800 plus 2,100 is the price variance in the same level. Plus we are having price variance from the lower level also. What is the lower level price variance? Lower level price variance is nothing but this raw material X. So this raw material X price variance also will be carried to this semi-finished product. How much it will be carried? Here when we are calculating raw material X price variance rolled up to the next level is for 9 kgs only, because 1 kg is already stocked. Price variance is 200, but out of 200 only 9 kgs are consumed in the semi-finished product. So only this 9 kgs value only out of 200 it will be rolled up to the next level. So 180 rupees is from the raw material X, which is rolled up to the semi-finished product, plus 180 rupees plus then not only raw materials, the activity price variance is also there. In the semi-finished product, at this level. What is the activity price variance? 1200 rupees. For 12 hours, 100 rupees, 1200 rupees. In the same level, 1200 rupees is for SFGX, just know what we have calculated. Price variance for activities, 180 rupees plus 1200. Total divided by how many kgs we are doing in for this SFG. How many kgs totally? SFGX. Total is 8 kgs. 3 kgs are consumption. So 5 kgs are consumed, 3 kgs are still in stock. This value is for 8 kgs divided by 8 kgs. Divided by 8 kgs. Now this is the PUP price. Preliminary valuation price plus cumulative price difference at the same level. 2100 for material price variance, 180 is for the raw material lower level price variance which is carried or rolled up to this SFG level, and activity price variance 1200. Now, what is the cost here? 4800. Eight to 80. 8 to 80 divided by 8. 1035. Right? 8 to 80 divided by 8. 1035. This is the cost. This is SFG PUP cost, periodic unit price difference. This is the actual original cost. Next one, finished goods X in case of SFG FGX. So in case of FGX, first preliminary valuation. What is the plan rate? FGX plan rate is 2 kgs we are manufacturing, 2200 is per kg. Total is 4400 is the plan rate. Here the variance is 3600. 3600 is the quantity variance. 4400 is preliminary valuation. 4400 plus 3600 plus the cost which is rolled up from the SFGX. So which is rolled up here. 2100 is the price variance. Out of this 5 kgs we have consumed to the finished product. Out of this 5 kgs, 1312.5. This is rolled up to the next level from the semi-finished goods. 1312.5 is rolled up to the next level. Right? And this one also. rolled up to the next level is, it includes materials, right? So you have to enter directly 1425. This was is rolled up to this level and this was is rolled up to this level. Raw material X prices also will be there now. The final price which is rolled up to the next level is 1425, not 1312. It's 1425. It includes raw material X prices also 1425 here. This one is only in this level. This 112 is from this level, it is added 1425. Final price is 1425 only rolled up to the next level. This includes raw material X prices which is rolled up to this semi-finished goods. From here it is rolled up to this level. This is related to material cost. And same way activity cost also. In case of activity revaluation, at this level, semi-finished goods level, what is the price difference? 1000 rupees per 100 per hour, 10 hours. This is 1000 rupees for total kgs. From this hour, it is 1000. From this level, at this level, finished goods level 1000. The same way, which is rolled up from the next level, from SFG 750. It includes activity cost which is rolled up from the next level, material cost as well as activity cost. 750. How many kgs we are manufacturing? Total 2 kgs. So this is a cost of 2 kgs per unit is divided by 2. It includes preliminary valuation cost plus price variance in the same level and also price variance rolled up from the material price variance rolled up from the SFG level and activity variance in the same level and activity variance rolled up from the SFG level. This is total cost divided by 2. So now what is the average cost? 4400 plus 3600 plus 2425 plus 750 divided by 2. 5587.5. Here 5587.5. So this is PU price for the finished product. This is the price we are calculating in multi-level price variance. These are raw material X price, semi-finished goods X price, and finished goods X price. These are the prices we are using. This is the average price per PUP price. This is how the system value calculated. When it is calculating as a period in process for the previous period, for the ending period, at the end of the period we are calculating this PUP. This is the actual price, periodic unit price, which includes preliminary valuation price and variances of the existing level and variances from rolled up from the previous level, and also if there is any exchange rate price differences, if it is related to foreign currency postings, the average price it will consider as a PUP. Now after this is the average price. Revaluation of consumption. If you are consumed already in the semi-finished goods X, raw material X 9 kg consumed, semi-finished goods X 5 kg consumed, finished goods X 1 kg we have sold, right? So here 1 kg stock, 3 kg stock, 1 kg in stock. This is the average price only. So how to revalue this consumed materials? We may consume materials against the cost center, or finished goods we are solely we are already sold. So that is actual COGS should be updated. This is actual COGS 5587. So at the time of sold, this is happening as a period and process. Initially when you posted a sale entry, at the time of sold we might have booked this cost of goods sold. Without these price variances, we might have booked the original preliminary valuation only 4400 only. So now we need to book this value for whatever the consumed quantity by adding this PUP price. Then that is nothing but revaluation of the consumption. Because this PUP price we are calculating only as a period and process, but during the period, whatever the sales we have done, the sales were posted with 4400 only, not 5587. So here what we are doing is we are revaluation of the consumption at PUP price. We are evaluating this consumption at PUP price. Right, whenever we are revaluating, what revaluating? We are revaluating COGS here for semi-finished goods. In case semi-finished goods, we are revaluating. What values it should add? So raw material price difference plus semi-finished goods price difference plus finished goods price difference. It should be. So we sold 1 kg here. We have kept 1 kg as a stock. So what is the raw material price difference here? Raw material price difference is purely only for raw material. Here 112.5, which is rolled up from the raw material X. And semi-finished goods price difference is 1312. And finished goods is 1800. And in case of activities, total 750 is the price difference. Okay. So what I can see here is raw materials price difference is 112 plus semi-finished goods is 1312.5 plus activity price difference is 750 plus 1800 is This price difference. Hmm? 1800 is finished goods price difference plus at this finished goods level, that is SFG level 750. At this finished goods level, again 1000 rupees is the price difference. 1000 rupees is the price difference. Total divided by 2 kgs. Only 1 kg we have sold. This is 2 kgs. One one two plus 1312 plus 715. It includes material price differences and activity price differences at lower level as well as at same level. Divided by 2. 2487. 2487. So this will be added. This price difference will be added to the COGS, or unit price difference will be added to the COGS. Earlier is 2200. This is preliminary valuation. 4400 is for 2 kgs. Now 2200 is for 1 kg. So the total COGS will be this one. 4687 is the total COGS. This is how it will be calculated. Right? The closing stock, how the closing stock will be calculated? 1 kg into PUP price, 3 kg into PUP price, 1 kg into PUP price. This is the closing stock value. 1 kg into PUP price, 120 rupees. 3 kgs, 5 kgs, sorry, 1 kg. This is closing inventory value. This is closing stock value. So here when we are using the closing, when you are posting the closing entry, normally in the product costing, the price variances and production variances will update to the stock. It will debit or credit the stock. It will debit or credit the purchase price difference. It will debit or credit the production variances. But in ML, we are not using this production variance account. Instead of production variance account, we are using ML intermediate account. ML intermediate account. Here we are using ML intermediate account. We are not using a production variances account. If there is any price variance, okay.
Sir,
Yes, yes.
sir, in FGX we got that 4,400, no? That was the at planned cost, right?
Yeah, preliminary valuation price or
Preliminary. So
standard
that,
value, plan rate.
that minus 5,587.5, what we got PUP, that difference will not be consumption, is it?
No, the difference will not be consumption. So here the consumption COGS is already 2200 is booked. Hmm. So the difference, it should come as the difference only. It is coming different as the same, the difference only. Maybe we have done some wrong here. Hmm. This is per kg only, no? The difference only should come. Some difference is there, right? So this is rolled up 112, 13, 12. From where these values are coming? 1800, okay. This one is okay. Raw material price difference 112. Semi-finished goods price difference 1312. Finished goods price difference 1800. Finished goods price difference 1800. This one is 1312 plus 112. This is 1800. This is rolled up cost. No problem. Next one comes to activities. Activities having here 750 rolled up to the next level. Here at the same level 1000, 750 plus 1000, 750 plus 1000. Preliminary valuation at SFG level. Sorry, SFG level I have not added, I think. Preliminary valuation at FG level I have added. I have not added preliminary valuation. This is only the price variance. Price variance, price variance, price variance. Preliminary valuation at FG level. Okay, this 2200 I have not. Instead of 2200, I added 1800. From where 1800 I have taken. Two six eight seven plus 2200. This should come as 5587, but it is showing as a 4887. What's the difference? 5587. 700 difference. 700 means it should come the difference between 4400, that's 2200 minus 5587.
for consumption formula should be into consumption and divided by.
Yeah, this I have not given as not 2200. I think here already per unit only 2200 is per unit, right? This I have to give 4400. This is not, I think, what is this 1800? 1800 only should not be per unit. This is 3600. That is the difference. By 2. Already this 1800. This 1800 is already per unit only. Because we have to give this price variance roll up to the next level 3600, not 1800. That is the difference. Now you can observe this is 3600, not 1800. 112 plus 1312 plus 750 plus 3600 is for 2 units plus 1000 rupees divided by 2. 3387. 3387. Now you can observe it should equal to 5587. Here 1800 is correct, but that will not be divided by 2. That is already per unit only. This SFG price difference at finished goods level I have taken by mistake as 1800 only. This is 3600. As again I am dividing, there is a problem. Okay. All price variances only. Raw material X price variance, semi-finished goods X price variance, semi-finished goods X activity variance, finished goods X price variance, finished goods activity variance by divided by 2. Total is 3387. It should equal to 5587. Okay. Now it is done. Now this the entries whatever we are posting here. I will just show you how the entries will be posted. So here we are using different GL accounts, so that will be mapped with your OBVC settings. The MN entries here updates like this. So in case of raw material X, what is the price difference accounts it is? What is the GL accounts it will update? I will explain now. So it will debit multi-level price difference price. One account we are using multi-level price difference. Multi-level price difference account will be debited. Multi-level price difference account will be debited, and it will credit the stock account. What is the price difference here? Okay, stock we are having, right? So it will debit stock only. Here 9 kgs we have consumed. 1 kg is still there in stock. The total price difference is here we will use single level. This is single level price difference account. Price difference account, it will credit with what is our single level price difference account. The total price difference we are getting in this total is 200. The total is 200. 200, 180 is price difference account. Here total is 200, 180 is price difference account, and 20 rupees is still in stock. This is in case of raw material X, multi-level price difference account data, stock account data, still stock is there. It will be added to the stock. Single level price difference account. In case of SFGX, finished goods X. In case of finished goods X. Okay. So here So first one, price difference added to the stock is, it is coming from the lower level. Price difference added to the stock is 67.5 kgs, 67.5. So you can take it as a 68. Okay. Stock account will be debiting 67.5. Next one, to which it will credit, it is coming from lower level. So multi-level price difference account is crediting 67.5. This is one thing. Again, here we are having in this level. This is keeping at stock. This is price difference account. This 112, it is coming from lower level. So this, out of this 180, 112, we have to debit multi-level price difference. Multi-level price difference. This is, it will debit 112, and same multi-level price difference, it will credit 112. Right? Next one. In this case, so here SFG, this one is over, this one is over. In case of finished goods X, in case of finished goods X, multi-level price difference, stock account will be added 1 kg, same price difference. Stock account will be debited, multi-level price difference account will be created with equally, right? Equally 712, 712. Here this is not a multi-level price difference. This one debit is COGS. We have sold. These are the entries you could post. For this, for each one, some OBYC, GBB, AUR, PRV, price differences, PRV, PRY. Those things will MM module. Okay. So from tomorrow onwards, this is just introduction. So all these things, whenever we are doing executing in the system, we will verify with our calculations. So from tomorrow we'll start configuration. Yeah, I'm stopping it itself. From tomorrow onwards, we'll start configuration. Okay. Hi Gopal, how are you?